Hello everybody and welcome to the Daily Horizon View. Today's date is the 28th of the 5th, 2019. As always, we're looking at the ASX exchange traded funds, and this is our top 5's. Today our spotlight is CETF, which is the Vanguard Vectors China AMC CSI 300 ETF. Hang around for a look at that one. Be worth a look, I think, anyway. Moving on. We are here to crack your financial sky. Here to give you guys information, really, just to build up everybody's confidence, I suppose. Give us a thumbs up, give us a subscribe, greatly appreciated. Definitely helps me along with my work and getting videos out there, expanding the audience. Top 5 percentage rises. We had QRE, CNew, Cure, CETF, which is a spotlight, so hang around for that one. Very interesting. And OO. So for those who may have watched yesterday's video, QRE is the BetaShares Australia Resources Sector ETF, and that tracks the performance of the Sol Active Australia Resources Sector Index. That ETF has a market capitalization of just over $32 million. It pays a small dividend of roughly 3.6%. So we saw a rise today of 2.32%, which equates to 15 cents. We had a reasonable volume through on that one, more than normal, I think. I'll have to double check it, but it looks to be quite high, of 9,800 shares traded. Top 5 percentage falls. We saw MNRS, GDX, ETPMAG, BEAR, and BNKS. So just a refresher, MNRS is the BetaShares Global Miners ETF, and that's currency hedged. That tracks the NASDAQ Global X Australia Gold Miners. That's a relatively small ETF as well, $7 million in that one. We saw a fall today of 1.16%, which equated to 4 cents, so not a major plunge by any means. We saw a volume shares traded of 8,100. It's not too bad for such a small ETF. Obviously, people trying to get out of that. So GDX is gold, so people getting out of silver as well. The bear ETF is not the best, and also people moving out of the banks, so moving into other assets. Top $5 rises. SPY, IHVV, IVV, IJH, and IKO. So SPY is the State Street Spider S&P 500 ETF, and that one tracks the S&P 500. That's a relatively small ETF. We'll see a market cap of roughly 31 million. Pays a small dividend of 1.76%. We saw today a rise of $1.82, which equated to 0.45% on a very, 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 very extremely low volume of 26 shares traded. Nothing to see here. Top $5 falls. We saw GDX, ETPMPM, ETPMAG, VCF, and IEU. So for those who have forgotten, GDX is a VanEck Vectors Gold Miners ETF, and that tracks the NYSE ARCA Gold Miners Index, and that is a very large ETF with a market capitalization of roughly $12.3 billion. We saw a little fall there of 27 cents, which equated to 0.91%, just under 1%. We had a volume of 18,300. That's a reasonable volume for that ETF. I'm sure that'll figure in the following slides as well, GDX. Top 5 number of trades. Let's have a look what we saw. VAS, IAF, BGS, IOO, and IEM. So VAS is the Vanguard Australia Share Index ETF, and that is a little different to most of the bigger ETFs. And this tracks the S&P ASX 300. We see a market cap roughly $3.5 billion for that one, so one of the bigger ETFs in the Australian market. That has a dividend yield of 4.45%. Reasonable rating from Morningstar, was given a bronze rating there. So number of trades, we saw 213 on the buy side because we saw a increase in price of 37 cents, which equated to 0.451%. Top 5 for volume, we saw ISO, NDQ, HAC, USD, and IOZ. So ISO is the iShares S&P ASX Small Ordinaries ETF. The fund invests primarily in Australian small listed securities that make up the index. This one is a reasonable size, not the biggest but not the smallest. So there's a market capitalization of $107 million. You get a small dividend yield there of 2.33%. Morningstar give it a rating of neutral. That's an interesting ETF. I'll have a look at that one in the spotlight another day. Volume-wise, it saw 140,000 shares traded. Shares, looks like on the buy side, we saw a rise of 6 cents, which equated to 1.17%. So not a major change here. Top 5 for value, we saw VAS, IVV, AAA, STW, IAF. So as mentioned before, VS is the Vanguard Australia Shares Index ETF. Pretty slow day on the market today. Not a great deal of volume, not a great high number of trades. Therefore, value is pretty low as well. So pretty pitiful day actually when you look at the numbers here. So VAS value of trades was $4.9 million. On the buy side, we saw a rise in price of 37 cents, which equates to 0.45%. So pretty low, not a pretty average day on the market. Okay, let's crack into the spotlight for today, and that is CETF, which is the Vanguard Vectors China AMC CSI 300 ETF. A bit of a mouthful there. So the VanEck Vectors China AMC CSI 300 ETF seeks to replicate closely as possible before fees, charges, blah, blah, blah. The price and yield performance of the MSCI 300 index. Index is comprised of the 300 largest and most liquid stocks in the China A share market. So big end of town on China. Pretty much one of the only ways you can actually get access to Chinese market. That's not Hong Kong anyway for an individual investor. So why would you buy this? Why would you look at it? You get 100% share China A share exposure. So the first US listed ETF that provides exposure to the China market, but this one is being replicated on the ASX. A-share growth driven by domestic consumption, which we'll have a touch on later. So domestic consumption growth in China is the largest in the world. Broad and comprehensive underlying index, so the index is performing pretty well. The MSCI 300 index represents approximately 59% of the total market cap of China's 2 stock exchanges as of June 30, 2015. I'm not really sure what the current numbers are, but that's just old information. But the 300 largest companies definitely make up a lot of that index. Click through this rubbish. So you can see a net asset value of 1772. We're trading just above that at $17.90. Market cap of just over $17 million. Management costs sort of getting up there at 0.69%, but given the fact that this ETF has a lot of different companies in it from all over the world, it's probably justified to a certain extent, but something to keep an eye on. There's distribution, I think it was in July. The dividend is about 0.74%, but you're not in this one for the dividend, you're in this one for the upside in the emerging market growth. So emerging market equities have greater potential for growth than developed markets. In emerging markets, the main growth engine is a rise of the middle classes and upper classes as well. You know, they are living longer with greater discretionary spending power, so that brings more money into the economy. So according to McKinsey, by 2025, consumption in emerging markets will account for $30 trillion, and that's nearly half of the global total. Investing in emerging market equities is a way for investors to access this potential growth opportunity, and at the same time increase their diversification to countries that are not represented in most portfolios. So, you know, most Australian investors are quite Australian centric, slowly changing, but you know, these ETFs are tools to, you know, that you can use to actually increase your diversification. As always, we should be having a look at alternatives. So one alternative is IEM. Also take a look at WEMG and have a look at VGE. Always a good move to do some further research before we make a purchase, because we want to make sure we're doing the right thing. Let's have a quick look at the overview. So since inception, I think it was late or mid-April last year. You can see on the graph, 1st of the 5th, 2018. You're on the downside. Year to date, roughly, I think we're down about 13%. But I mean, it's early days for this ETF. Like I say, you know, it's just run over 12 months now, so it's paid its first dividend in the middle of last year, and I think it's just one of those ones that you need to actually have a bit of patience with, because it's kind of a counter-cyclical type of investment. So I mean, you can have a look over here. So the top 10 looks to fluctuate a bit, but you know, you got big companies like China Mobile, Yum China, which owns KFC and those type of brands, Tencent, Samsung, Alibaba, Itaú SA, Investimentos, that's a Brazilian company. So it looks like there's 2 classes of Samsung shares included there. Hana Financial, you know, so it's got a good mix. If you go through the rest of it, you know, I think it's mainly China dominated, but you know, there's definitely a good mix of other countries in there as well. So for me, it's one of those ones that, you know, if you're willing to take a punt on, you might put some money into it, but I think it's one of those ones you need to actually have a bit of a look at and really think about what your investment thesis is. Does this actually fit into it? Is it going to be useful for you? But if you're looking for some diversification, this is one that might be well worth having a look at. And as I said, you definitely want to look at the other three options that I listed on the previous slide. Definitely worth doing further research before you jump into emerging markets. So as always, we're not promoting any particular ETF or product, purely information here. So you need to take your own financial situation into account and get additional information and complete further research as and where required before we make any purchases. As mentioned before, we're here to give you financial just information, I suppose, trying to demystify the whole world, make it not as scary as it appears at times. So we're here to crack your financial sky, make you guys a bit more confident if we can. So give us a thumbs up, subscribe, and make sure to hit the bell because you want to know when the new videos come through. Sometimes I try to get them out at the end of every day, but sometimes it just doesn't happen depending on what else I'm doing at the time. Thanks, guys. Leave a comment. Yes, give us a like. Greatly appreciated. Catch you tomorrow. Ciao.